Thank you for joining us today for our webinar titled Using AI to Identify Targeted Baskets for Investment Management. In this webinar, you will learn how to effectively isolate targeting opportunities with artificial intelligence, understand what drives AI decision-making, and how to create baskets that work for your investment portfolio. I'd like to begin by introducing our speaker. Alexander Cole is the Managing Director of Product Strategy at Boosted.ai, responsible for our platform success through setting product direction, feature road mapping, and delivering the best user experience. Working at the intersection of finance and technology, Alex is passionate about bringing cutting-edge, accessible products that augment the investment management process to a broad user base. Prior to joining Boosted.ai, Alex was in charge of Uber EMEA's $1 billion plus delivery business line and helped launch a personal money management startup in the UK. Alex holds an MBA from the London Business School in London, England. He's a CFA charter holder and graduated with a finance degree from Concordia University in Montreal, Canada. Without further delay, I'd now like to pass it over to Alex. Thank you.
Hi, everyone. Thanks, SK, for that intro. Really appreciate it, and thanks, everyone, for joining. So let me share my screen, and we'll get started on the presentation. So in my previous webinar, we focused a lot on how the AI and ML toolkit that we build, combined with your investment expertise, fits into your portfolio management process. We've also done a lot of technical webinars before, and we focus on specific features and functions. We also did a webinar previously to that overviewed the AI and ML industry overall. So please reach out to SK or myself if you'd like to link those recordings. I think those are very interesting webinars to get a better idea of our entire platform and the AI and ML industry taken together. So today I wanted to shift gears a little bit, and I wanted to do a quick intro first, and then I wanted to showcase a feature that we built for a much needed use case, which is identifying, evaluating, and building a multi-purpose baskets of securities. And then I'll do a quick case study, and I'll showcase a couple of hedge baskets that I built before this presentation. So starting off, there's been a massive explosion of data in all aspects of the world and all industries, and touches all of us. So traditional data sets, have always been available. They've already been used by investment managers and other industries alike. Alternative data sets are becoming more and more important lately, and everyone is trying to use this data, both from classic powerhouses like Renaissance and any other hedge funds, and even day-to-day investors. Sometimes you even see, people on Instagram trying to data mine U.S. Congress trading history. And some of these efforts, consistently work. Some of them do not, but sometimes you get something like a GME run-up. But taken together, the theme these days revolves around increasingly how to get access to more of this data, how to get access to more alternative data sets, and critically is how to actually extract meaningful insights from it. So this is where AI comes in. This is what we are working on. So the AI is touching a lot of industries and professions these days, starting from insurance. So I'm sure when you're submitting your quote these days, which what I've had to do earlier today as a new homeowner, I had to go through a process of my home insurance, and you actually get the quote very quickly and efficiently. And I'm assuming a lot of this is based on machine learning and AI technology. Legal and healthcare also using it quite extensively these days. Also, when I was at Uber, last time I was there, what we used it for was for pattern recognition, and it was actually very effective in detecting fraud. We even caught a massive scheme in London, UK, with drivers and customers and fake restaurants selling alcohol to each other and just using a bunch of stolen credit cards to pay for all of it. So it works. But shifting to the investment management, what we believe is that the marriage of human and machine is where the future of investment management lies. So we believe that the machine learning tools and outputs, they generate great results, but only when combined with the things only humans can offer: intuition, insight, ingenuity. And that's when the outcomes become really, really exceptional. So now I want to talk a bit about Boosted AI and how we are approaching this problem. We created a tool that lets you combine your money management expertise and a powerful AI engine. We provide a cutting-edge, constantly updating toolkit that is powered and overseen by a team of both finance and computer science experts and it delivers proven success to customers, large and small, across the globe. Our expertise also speaks for itself. We have a large number of people with backgrounds from leading tech companies, financial institutions, a lot of research think tanks, and these people are working around the clock and accessible to our clients to perfect the platform and also to work on the individual challenges our clients might face implementing it or in order to get better results. We serve over 35 institution managers globally with AUM over 1 trillion these days. We have a large client base that is spanning from all the way from US and Canada through Europe and to Asia. We also have a large customer support team that is able to provide the real-time service to help our clients use the platform more efficient manner. We're backed by one of the largest Canadian hedge fund VCs, Portage Ventures. We're a post-Series A company. So the last slide about on Boosta is in this context is how do we actually get incorporated into the day-to-day investment management process? So it's again a combination of machine and human interaction and human experience. So you select your stock universe, you select the factors that are important to you, and all this is done within our platform. Then the machine learns how to invest, and it's able to stack rank these stocks from best to worst. And this is the step one of our overall process. Then later, what this happens is that once the stocks are stack ranked and shown to you and presented to you, and you can literally see how decisions were made by the machine, what we do is we put into the optimizer, and you have a lot of options to play with there. You can optimize your portfolios to suit your investment style. You can apply any sort of factor tilts, any risk mitigation methodologies, any sort of turnover optimizers. You can do a lot of these, most of these in our platform. And if there's anything that goes outside of the scope for that, we're happy to discuss those as well. But it's a full front-to-end platform, starting from all the data sets that we have integrated into our platform that you can use already, all the stock universes that we've suggested already that you can pick from, millions of factors coming from FactSet and Capital IQ that you can use, and the optimizer that gives you the complete output that you can take advantage of. So going back to our agenda today, I want to take a look at a specific use case of a stock basket. So we built this new feature that we call Similar Stocks. And I wanted to showcase how the basket of securities are built, how they're evaluated, and how can they be used. So let me switch real quick to the platform here, and I'll show you how it's used in practice. All right, so this is our Boost AI platform, and I'll start from the intro screen here, just give you a brief overview of what the platform looks like. So when you start off initially, you go into the screen, and this is our demo account that we use for presentations. So there's a number of models here. I'm going to use the Russell 1K today for the demo purposes. And while the model is loading, this is basically what every customer gets access to. And once you log into the platform, which is now here, so this Russell 1K neutral portfolio is a portfolio that we use for demonstration purposes. So don't mind, it's done quite well, but it's not in any way fully optimized to showcase a specific outperformance or massive blowing out the numbers here, the blowout numbers here. But this is a model that I've set up for this demonstration. It rebalances weekly, it retrains its backtest quarterly, and the benchmark is Russell 1K with a 21-day time horizon. So as a brief overview of the platform, this is what it looks like with all the tools on the left, with the portfolios that you can switch from on top here, with your graphs going back to showcasing your performance, your model properties here, and a bunch of tools that you can use for both fundamental quant investors alike. For example, if I want to look at my portfolio and want to share it with my teammates, I can use one-pagers that are easily printable and shareable. So all this is available through our interface here. And then the way it's built is that you always have this top panel with the performance on top, with portfolios on the top. with the features on the left showcased at the bottom. So in this case, I'm showcasing the tear sheet, which is the summary of the model that I'm loading up here. So it showcases you things like the alpha, the performance, the turnover, the quantile stratification, and overall performance over the years. So this is what the overall model screen looks like. I've set up a couple of things here for us to look at. So for example, the portfolio, what I call hedge baskets, is sort of the starting portfolio that we're looking at. This is the one that all our baskets are built based on. So this model has a number of variables in it, and I'll showcase it through the word cloud, and it's going to be important later, and I'll tell you why. But the feature word cloud basically summarizes what are the factors and variables that have been used in this model and how important they are for it. So you have things like 9 months momentum, market cap, sectors, foreign exchange rates, and going smaller and smaller in fonts, you have asset to price ratio, etc. So these are all the variables that the model is using for its machine learning. So going to the similar stock screen, which is over here for today, is a new tool that we built that serves two purposes. So one purpose is more of a research and for general interest purpose, which lets you see other stocks that are comparable to the stock that you're interested in or a basket of stock that you're interested in. And the second purpose is building actual portfolios out of those. So I'll cover the first one later, and I'll walk you through the screen with that. So let's pick Amazon here, for example. And starting with that, it will show me all the similar stocks that the machine thinks are similar to Amazon. So the way it's structured is that we have all the filters on the top, so you can filter through the factors, quantiles, correlations, similarity scores. You can generate portfolio, export all this to CSV or PDF to share it. The screen itself looks like this. So when I typed in Amazon, that's your target security that is shown here. And you have a number of ways you can sort the screen by. The most common approach that is used a lot is just basically using correlation. So I sorted by correlation here, and as we can see, what are the securities that are correlated highly to Amazon? Not surprisingly, Google, Apple, Adobe, Microsoft, etc. So they have pretty high correlation, therefore they're considered fairly similar. The other ways we can look at similarity are the overall similarity and price similarity. So let me cover that. So price similarity is basically the similarity based on the historic price movement, which is sort of similar to correlation, but with a machine learning tilt. Data similarity is a more interesting one, in which what we do is we take every variable that is embedded in the model, and we'll look at how are the stocks similar based on every variable that is embedded in the model. So it encompasses all the factors that the model is built based on. So it gives you a more holistic view of similarity of the securities. And then combined, these two give you the overall similarity. So basically there's three ways to look at it here: pure correlation, price similarity, which is only historical price, data similarity, which is basically covering all the variables in the model. Then what you can look at is another things you can look at is all the factors that go into the similarities, such as here I have selected machine 1, machine 2, machine 3. So as you can see, if I sort by correlation, the machine factors sometimes are not exactly the same because that's not what's being used here. It's mostly correlations being used. So if you look at the comparison of Amazon to Google, it is highly correlated, but at the same time, the machine scores are not exactly the same, which one here is in Q2, Q5 and Q4, Q3 and Q4. So you can also add other things like the traditional factors, like for example, profitability, momentum, and see how those compare. So for our target securities, they're actually in the same quantiles here. So you can use this as a research tool to kind of gauge what are the securities lay on the factors, and where are the securities fall on these traditional measures like correlation, beta, etc. So what's more interesting is that I've sorted by correlation initially, but if you actually then sorted by data similarity, which is the overall similarity, this is where interesting things start to come up. You look at stuff like Microsoft, like Amazon, and then other securities that are similar to it based on all the factors of the model are things like Take-Two Interactive, but also things like Highwood Properties, Atmos IMG, which are not maybe as intuitive to you, but the machine thinks and the pattern showcases that these actually do move in a similar fashion. And why is that's more clear here when I actually show these factors here is that because a lot of them fall in the same quantiles. Like for example, here, all the Q1, Q5, Q3, there's some differences here in machines, some difference in profitability momentum. But overall, this is why the machine thinks that they're more similar than using just pure correlation. So with that said, how do you actually use it? So as I said, one thing is you can use this as a pure exploration exercise, which is you want to look at what are the stocks that are potentially similar to the target security that you have and discover other securities that move in a similar fashion based on either price, data, or correlation, or anything else, or based on any other factors. Here, you can sort them by that as well. And one interesting thing that we can do is actually not only look at one security, but look at multiple securities. So for example, I'll type in Netflix, and you'll have a basket of 2 securities now that is being compared to all the other securities here in this case. So if I resort it, potentially we'll get the same outcome because these are fairly similar securities to begin with. But actually, some of the ones that come up here are a bit interesting. You have the CHE, you have the Raytheon, which is not super intuitive again, but the machine thinks and the pattern shows that these do move in the same direction, directionally the same. So how do I actually use this now? So this is where another second step of that process comes in. So what I can actually do now is not only look at these baskets and single securities that are potentially similar to them, I can actually build portfolios from them. And how you do that is through generate portfolio. So generating portfolio brings up this menu option, and you enable basket trading. And now it will showcase you how the machine is able to build portfolios from the basket you've set. So as you remember, I've set the Amazon Netflix earlier in the process, and this was my primary basket in this case. I'm saying that my primary basket is long here, which means that I'm going to build a hedging basket. We can also build replication baskets, let's say if you're limited to certain securities or by your IPS, but you want to replicate the performance, you can do that. So it's all accessible here through this interface. In this case, I'm just going to focus on hedge baskets for now. And what you can do is I can potentially enter the stocks into the hedge basket that I want, or I can just let the machine select the ones that it thinks are the best hedge. And the way it does it is based on the following options below here. So I can just do it with a pure correlation, which is what I showed before. So then the machine is just going to build a basket of hedges that are just highly correlated to each other and call it a day, which is kind of a standard approach that's could be used also with success. If you want to get a bit more granularly, you can tweak the screen by the factors that I've shown before. So if you want to focus the machine to focus more on a price similarity, you can have it focus more on data similarity. You can also have it focus on the factor weights, as in how similar the machine factors, the profitability, volatility, etc. are. Another interesting, these are all the ones that were shown earlier that I highlighted, but the 2 cool other things is that the ESG weight is also possible to be adjusted here. So if you want your portfolio to have a high ESG rating, your hedging portfolio, you can select that, and then your hedge is only built with the stocks that have the high ESG weight. Signal importance is another interesting thing here. Like one thing that's sometimes said about the hedges is that, hedge is something you lose money on, a lot of money on. Well, hopefully you don't lose all of it, and this is how you can tweak it. Because signal importance also looks at, what is actually the quality of the stocks that goes into this hedging? So the signal importance, if you put it too high, is going to actually tell the machine to seek out the rebalance of stocks that are highly rated, not only moving up in the same direction as your target stock for the hedging, so you can short them, but also have those stocks be of higher quality, so potentially your returns are not as sacrificed as they would otherwise be. So this is how you set up the basket, the hedging basket here. Then you would hit add, and the new portfolio would be created with this hedge. And here you would have 2 securities hedged by 20 stocks with basically everything at medium. And once you do that, it takes a bit of time to train. So I've prepared 2 baskets here to showcase what the output would look like. So starting with the simpler case, I just took Apple and I created 2 portfolios. There's Apple correlation hedge and Apple machine learning hedge. So machine learning is the one that I used more data similarity. I used more signal optimization. I used a bit less of the price similarity. So I wanted to kind of push it more to the extreme of the machine learning versus just pure correlation. So if you look at the Apple correlation hedge, it's not quite all right. The performance wasn't that great. And just to remind you here, the black line is the benchmark, which is Apple in this case. and the orange is the live data test of the hedging, which in this case was 20 securities that the machine selected to be the hedge instruments for this one security. So you see there's correlation is in the 50s, standard deviation is about 20%. And just visually looking at this, the hedge does accomplish its goal of hedging out the performance of the security. So if I switch then over to the machine learning hedge, and I put them side by side here, tab, so we can kind of jump back and forth and compare. So you can see that the hedge itself still is offsetting the moves, maybe to a lesser extent a little bit, but at the same time, what it does accomplish is that you actually don't sacrifice as much performance. The standard deviation is a little higher, but still acceptable, and the quantile spread is still good. So it's up to you which one you would want to use. It depends on your goals, but there's an option to here to build a hedge based on the machine learning, and at the same time effectively hedge the stock, but at the same time also not give up as much potential upside as you would have with a pure correlation approach. And this is not a static hedge, by the way, just to reiterate, this model retrains every quarter and rebalances every Monday. So the securities that go into the hedge are constantly adjusted to make sure that the perfect hedge is maintained. And as I showed you earlier, there was also the case of baskets. So what I did is I built a portfolio for a basket hedge, and I used our classic FANG combination here. And I've also built a correlation hedge and a machine learning hedge. So again, I have them side by side, so we can jump back and forth and see. So the pure correlation hedge does its job of having a low correlated basket with a 15 standard deviation. Again, you give up a lot of performance here, but it does effective job of offsetting the performance of FANG, which is kind of hard because it's been doing quite well, and all the securities that are related to it have done quite well as well, which is showcased here on the ML hedging setting, in which you still do get the offsetting characteristics on the chart here. So you still kind of offset the highs and the lows, but at the same time, you're actually still able to maintain some performance while minimizing your volatility. As you can see, your standard deviation is still quite low, under 20 here. Correlation is also still quite low, but your alpha and your annualized performance returns here are actually not as sacrificed as they would have been if you just used the correlation hedge. So one last time, I'll jump back and forth to kind of make that visually visible. So that's what we've built to help you build these baskets for hedging, for application purposes, for pure exploratory reasons, just to see what are securities that are similar, what are securities that are different. There's much more things available in this tool, but I wanted to focus on this one feature specifically for today. And at this point, I'll hand it back to SK for any questions.
Thank you, Alex. That was perfect. We have a bunch of different questions. Let's begin. What are some of the implementation IT challenges I could face if I were to start using this product at my firm?
Yeah, sure. Let me just share my contact info here, by the way. Hopefully you guys can see. So just feel free to reach out at any time to myself or SK. Yeah, sorry. So the question was the implementation. Yeah, so as I showed you before, I'm running this on a regular laptop as a platform that's, just works through your browser. However, I must say that we do have a very extensive API support. So if you do want to be more integrated, you might need to connect to our API, and there might be some things you might need to work out with your IT to get access or whatnot. But that's as far as it goes. There's not massive lists for that.
Thank you. Next question. Is there a way for a manager using the fundamental approach to use this platform?
Yeah, so I mean, what I was showcasing, I think, would be pretty applicable to Fundamental Manager because it's visual. You can export it. You can showcase easily why you're making certain decisions. But there's also a large number of tools that we have and growing. So one pagers, for example, when I was showing you the portfolio earlier, I could have generated one pager that has all the portfolio stats presented to you in an easy to access format. Also, we have, when I talked about before about how do you implement the platform into your investment management process, and I talked about the first step of the machine picking stocks and stratifying them. We have a really good output that actually shows you that as ranking. and it shows you how the securities are ranked. It shows you what variables go into them. It's easy to understand, and again, share with your team and discuss, and use as a not only investment tool, but also like a tool to verify your thinking and your ideas, and gain meaningful insight from, as opposed to just using for pure quant purposes.
Thank you. Very quick announcement for our audience. I see a bunch of raised hands. We will not be able to unmute you on this webinar, but please feel free to send us your questions via the question and answer tab, and we'll take them as we go along. Next question for you, Alex. What does machine actually learn? Which factors are correlated with future returns? Would you like to answer that?
Sorry, can you say that?
What does the machine actually learn, and which factors are being correlated with the future returns?
Yeah, so the machine learns. Machine looks at depending on what the factors you actually select the factors yourself when you set up a model. So you set up a model with the stock universe you're interested in. You set up the factors that you're interested in, and the machine learns looking at the price history. It learns the lessons, and using those factors, it derives what the patterns that might be available in that data. So I'm not sure if I'm answering what you're looking for here, but basically, yeah, like you set all the variables that you're looking for. The machine learns lessons based on them, and then it converts it into the output of stock certification, which is based on those factors, and then puts it through Optimizer. Hopefully that helps, but maybe feel free to reach out if I'm not sure if I get the question fully.
Thank you, Alex, the concerned audience member. If the question doesn't answer, you can write a follow-up question or reach out to us. We'll be happy to answer that either way. Next question, Alex. What is the benefit of using something like your similar stocks feature to hedge versus my current process, which is using an ETF that I've identified as similar to my basket of stocks?
Yeah, so when I was worked at an asset manager in Toronto, we used ETF hedging quite a bit, and I think one of the issues was that even though seems that the ETF is similar, it might not be, and also there might be some liquidity concerns if the ETF that you found is a bit more representative of your basket, but it's a smaller ETF that you might not get the volume that you need, and you would have to then go through the creation redemption process, etc. So whereas here you easily can hedge using the highly liquid securities, and you can actually customize what the securities that you're hedging with, and you can visually see how the hedge is performing. And at the same time, you can then later tweak it, and it just gives you lots more customization and visual output that you can work with, as opposed to the lack of transparency or those other technical issues when it comes to ETF.
Thank you. If I use API Connect, does my data go out of firewall, or does it always stay in-house?
I will have to defer to that to some more technical people, but I know that the way it works, for example, for us, like there's nothing that we don't even see your models. So whatever you're working on is not even accessible to us. So everything that you work with, I'm assuming, stays in-house with you. You just use the tool, and we can't even see. Nobody can see what you're actually working on, so it's very secure.
Thank you. There's another question on the column that we showed about data correlation. Sure. It asks, can you elaborate on that a bit more? What does it mean when the tool says companies have close data correlation?
So the data correlation, on a high level, what we look at here is that we look at all the variables that you've selected for the model. Let's say the momentum or like market cap, and you look at all the values of that variable for those specific stocks, and then you look at the values for those variables for the target stock you're using as well, and then you look at the distances of those between those values, and then you standardize those distances to give you a score. And basically, it's a summarized approach of the number of distances between each target security and the variable of each of the hedge securities. That is all taken together, standardized, and given a score that is then standardized from 0 to 100, and then gives you the data score. So it's we'll use any standard machine learning techniques that are commonly acceptable. We just tailor them more to finance, And yeah, this is a high-level answer that I'll leave it with, but without going into too much detail of the implementation here.
Thank you, Alex. There's another question. I'll read it out to you. Can the machine solve for pro forma volatility as opposed to price? Meaning that the machine solves for the lowest volatility basket going forward. Is the time frame customizable? For example, solve for lowest 6-month forward volatility. Would you like to answer that?
Yeah, I think I'll try to answer that. Like, I would love to talk to whoever asked this more, but I think when you do set up a model initially, there's different goals you can set up, which is, one is the alpha, and there's also any other variables, maximization, minimization you can set up. So you can use volatility as one of those. And in your model setup, the machine can solve for that. And that's on a high level, but it would be good to talk to whoever asked that to see what your actual interest is, so you can potentially solve for that for you.
Great, thank you. Next question. Can you explain how are you able to determine similarities and differences between stocks?
Yeah, so it's kind of like what I mentioned before. So you take for each security, the value of the variable that you look at is assigned, and then it's compared to the value of that variable in target security, and then you look at what the vector distances are, and then you standardize those differences taken in aggregate and standardize them from 0 to 100, and then that gives you the similarity score. That is a data score versus just you looking at the price history as a standalone factor. So yeah, that's what we do here for the data score.
Thank you, Alex. With that, we're at the end of our session. Do you have any parting thoughts to share with the audience members?
No, thanks everyone for joining. I really appreciate the questions as well, and some of them are, hopefully I answered what you were looking for. Would love to continue some of the discussions in terms of like the volatility and and how the factors work in more detail. So reach out to myself or SK. We're always happy to set up a demo or go talk to it a bit more. And thanks for listening, and thanks for joining.
Thank you, Alex. Thank you to our audience. Have a great day ahead.